Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Oh, wait. That shouldn't be so loud. Hope that didn't bust your ears. Well, guys, it is Friday. It has ended up being quite the eventful week. Tons of crazy stuff happened after we stopped trading yesterday. Oh, hold on. Gonna turn that off. Some crazy stuff happened with the Bank of Japan after we stopped trading and overnight. And we have some PCE numbers, so some pre-major numbers coming up here real quick. So let's try and get through the charts really quickly here. Need to minimize that, do some rollovers. Oh, that's right. Our micros roll over. This is the last day for the micros, and then we gotta switch them. Okay, so volume profile. So what happened? Well, so we were already getting some downside action off of those positive GDP numbers, and then the Bank of Japan put out some headlines talking about yield curve control, and saying that they were going to change the yield curve control to allow rates to go all the way up to 1% from 0.5%. And the treasuries just absolutely puked. There was like a really rough pullback, and then they puked even further. Now, overnight, they have recovered a lot of that, and we are currently sitting at 3.95. S&P 500 took a huge puke on that news, by the way, ending the day negative and ending the longest winning streak ever. So, crazy stuff here. You got oil still kind of trending upwards. Gold and silver. Well, gold and silver kind of had I think I'm missing some data in here, but they got killed on that news, but it's still like pretty okay. Okay. I think that silver chart is more what we're supposed to see. And they got killed. But like the prices, they're not terrible. Okay. And then we got copper. Copper, well, kind of in a range. Doing okay, I guess. Bitcoin also hammered on the news. Bitcoin seems to just be correlated with these tech stocks. And the dollar getting stronger on that news. So, what is the economic numbers that we have coming up? Well, we got US core PCE price index month over month. We're looking for a reading of spot 2. Now, here's the thing. I think we're pretty likely to come in close to that estimate. Spot 2, that's kind of what has been coming in. You might see now personal income and personal consumption. I'm not so sure. Those might be a little bit high, and then the market could maybe sell a little bit on that. But I'm concerned that what we might see here today might be a little bit of a head fake. What I'm anticipating is that we will get some, a little bit of relief from this news today, but then in the coming weeks, yields perhaps march higher, because a lot of the indicators and so forth that we've been getting suggest that inflation will continue to be a problem in the coming months. And not only are we seeing that in some of the PCE numbers, we're seeing that in a lot of political risk and headline risk as well, right? So the Ukraine war is getting worse, and they've been stopping shipments in the Black Sea, so that is going to increase the price of wheat. And it's just really effing hot over here in the US, so that's going to negatively affect crop yields. So on the food front, you're going to see inflation. You're seeing these unions make big wins and get concessions from companies on pay. So that's going to probably contribute to inflation. Yeah, I think inflation is going to be a concern for the coming weeks, regardless of what happens here this morning. So We got about 45 seconds here. I am not going to trade the initial move. I can see liquidity thinning out pretty well here. So this could be an interesting and or confusing trading day, depending on how these numbers come out, right? So let's not get ahead of ourselves. Let's just let the numbers come out and deal with what we get, eh? And there's the liquidity completely thinned out. Micros pulled. Okay, so I got personal income spot 3 versus spot 5. Core PCE spot 2 as expected. Okay, so those numbers are good. Those numbers are good. Too wide for me to try and trade it in the micros here. I would totally be willing to hit into 395 though. Let's do it over here. One contract. Well, they did, you know, do their meeting and announce everything and kind of explain it all. And they did say, you know, we're going to allow rates to rise up to 1% instead of keeping them down at 0.5 like they were. Okay, so I think this news is positive, but they don't seem to be holding so far. This really interesting. Well, real personal consumption was slightly higher than anticipated, but personal income was a little bit lower than expected. I'm going to say slightly, a little bit. It was a spot 3 versus spot 5. That one is actually significant. You know, normally that would be somewhat significant. So I'm not sure the market. Well, I think that what's going on over there is that the Japanese yen, man, is one of those trades, right? Like, you know, it's similar to the dollar, but like much worse, where there are a lot of people with big risky positions on in it, right? Like it keeps killing people, it keeps killing traders. But everybody wants to go and get it because if they ever get it right, you know, Japanese yen strengthens relative to the dollar and so forth. Like, you know, you're going to be a billionaire if you get that trade right? So when the Bank of Japan comes in and does that, I think that you had some really big positions just have to unload. So this is, again, we got to remember that the amount of volume and how much it moves and so forth is not necessarily reflective of the actual fundamentals, but rather the orders. And so that was a situation where a lot of orders got affected. I was really surprised by it because we had been hearing stuff at the beginning of the week that they were going to adjust yield curve control. I guess they didn't anticipate that it was going to be like a whole to 1%, or I don't know. But somebody was caught flat-footed on that thing, weren't they? It was pretty wild. Watching the treasuries over here react to that was just like a wow. Because we had already like I had people making comments on the video like, hey Seth, it looks like you're right. We are like selling all day, right? And then that happened. It was like, and it just went even further. Well, this little trade over here, not going so well so far. So I see those numbers as being positive, but the market is not agreeing with me. Why is that? Not sure. So we do have University of Michigan at 10 o'clock. That's also a relatively major number. So, well, I think I have to puke it. I think I'm going to have to puke it. Good morning. Oh, it's morning for me. Welcome. That's supposed to be Joker trades. Yeah, is that a Wall Street Bets profile picture? Well, they're kind of holding pat there, but they're gonna puke this. Yeah, there you go. That. Mostly because I think Japanese people believe a lot in their currency. Okay, what makes you feel that way? I don't know. Sorry, I missed your comment before that. I believe whoever was caught was not Japanese. Probably they weren't Japanese. Not because of some cultural sort of a thing, but just because the people with the money to be and the culture to be making that kind of a degenerate bet are probably not Japanese. No, it's all these people that think that the dollar is going to collapse and are concerned about U.S. hegemony coming to an end and all that. Well, sure enough, they made me puke it, and now it's going back up. Was it a Wall Street Bets picture? I don't. It was a little small, but it looked like a cartoon wearing a suit, but not blonde hair. It's too late for me to look at it now. Wait, open image in new tab. Maybe I can still see it. Oh, maybe it's an anime character. Maybe it's just an anime character because it's like pink hair. Well, if I was going to go for a reversal, I could do it right here. It kind of feels to me like the market doesn't care about the PCE news. Maybe they're looking ahead to it and kind of like on the things that I was thinking about, which is that inflation is likely to become a larger issue in the coming months. Oh, you've never visited Reddit more than 2 minutes in your life? Wow. I envy you so much. Oh my gosh, I'm addicted to that website and I hate it. I got all excited when there was the drama. I was like, maybe Reddit will finally die, and it didn't. You know, I know it's gonna be like a slow death and everything, but it didn't die. Okay, and I just don't browse the website on my phone anymore. But like, yeah, still visit it every day. Complain about the people that post there. Oh man. You know, that reminds me. We got to make a video about smart money concepts to piss everybody off. I feel like I lose enough IQ on Fin Twitter. Oh my gosh. you know, should I spend more time on Twitter? I don't know. I feel like so like the thing is everybody's always like, you know, there's all sorts of interesting conversation that happens on Twitter. I never run into this. Am I not following the right people? Because the threads that I see are just like, there's 2 or 3 comments and then nobody cares. You know, it seems like something only gets like a lot of activity on Twitter if somebody says something super stupid, right? Well, still ticking around. It looks like a lot of robot activity. I don't know if the traders are getting involved here. I don't know. I think on that sim trade, it was fine. I probably could have cut it off sooner, but I kept to like my limits on that one, and I think it's okay. I'm just trying to think here if we're gonna continue to see activity here in the markets. Well, I don't know. The S&P 500 looks like it's on a tear right now, right? So probably we will continue to have some good, some decent action. So do you trade only based on order flow? No. So order flow is an essential part of a trading strategy, in my opinion, because order flow is the only way for you to really see and understand what is going on. But trying to base your trades purely off of some sort of a technical signal that you're getting from order flow is not really a viable strategy for retail traders for the most part. I mean, you can kind of work it out, and I think that there are some forms of scalping that can do it, and it's difficult, but I've seen people pull it off. But largely the kinds of behaviors that are like really good, solid trades are just already taken out by the robots, you know? So what I'm doing instead, we're definitely reading the order flow. But, you know, I have a larger prediction about what the flows are going to be based on the things that I know. So that's what we're going through. Like, okay, well, the news that we just got was slightly dovish, but we just had all that Bank of Japan stuff. And I think that inflation is going to start to become a bigger issue in the future. And so it looks like that all has so far overwhelmed the buying. So, you know, I wanted to go long when I saw it. I took it, and it just didn't turn out. The flows flipped around on me too quick. Now that it's on the downside, I'm being a little bit cautious, right? I could end up taking a short here, but I think that I would have to get a good price to do it, because I'm concerned about how strong the downside can actually be if it gets going. So we'll see. But yeah, and I base all of this just because that's kind of what the research suggests. The research suggests that the market is very statistically efficient. And so I'm avoiding anything that is this sort of like, ooh, you see this pattern and does this sort of thing, right? I'm trying to rely more on the informational inefficiencies in the market to find my edge, because those informational inefficiencies are much more abundant. And yeah, as I was saying, we were talking about smart money concepts. I want to make a video about that, because I have... do you use level 2 data for order flow? Sure. So over, you know, the term level 2 has kind of become... I almost want to say abused, because it's like used differently in stocks versus over here and so forth. And so what we consider order flow is market data that is informed by the depth of market. Okay, so that means I can see how many limit orders there are at each price and what the best bid and best ask are. In order to categorize volume as buy or sell, I have to know what the current best bid, best offer is. A little iceberg there at 10.5. Then they traded through it. Cool. So what's the best way to learn order flow? Well, I have a video series. So I would go and watch my order flow video series, and that kind of goes into everything that you need to really know about order flow. Watch the whole series. Don't just watch like the first 2 or 3 videos. Watch the whole thing. The other place that you can kind of get some information, if you buy Jigsaw, they have really good education. That's another good place. And then if you want to get into the more advanced stuff, like how we know what some of the stylized behaviors that we see in the market are and things like that, I would check out the book Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot, and a bunch of other people. I'm going to pull the book out. But that's where like some of the more advanced concepts come from. That's like hardcore quantitative research. Well-proven research. They're just hanging out there down at 10. Like, they're not getting aggressive on the sell side. It's just kind of like slowly but surely falling, though. Like, you got a couple of people on the initial news release that wanted to buy on the news release, like myself, and then since then the buyers have just been not here. Nick Timmerow's core PCE, which excludes volatile food and energy categories and is seen as a better gauge of underlying inflation, fell to 4.1% in June from a year earlier. It was the lowest 12-month print since September 2021. Reads Nick Timmerow's Wall Street Journal. Former Fed Chair Ben Bernanke has agreed to lead a review into the Bank of England's forecasting and related processes during times of significant uncertainty. That's interesting. That was 44 minutes ago. I missed that one. Oh, this is actually interesting what Nassim Taleb is saying here. Okay, so they've traded a few thousand at 09. It doesn't look like they're quite done yet. I don't know if it's worth it for me to try and hit it here, though. Like, I think we might be able to get a few more ticks out of it. The thing is the overnight low is all the way down at 25, right? So, like, way down here. But since the news, we're already, well, it's about 10,000 contracts short. About 10,000 contracts short. So we're kind of getting into a spot where I'm a little bit weary about. Okay. Nassim Nicholas Taleb, counterintuitive but simple arithmetic. The deficit in essential nutrients requiring supplementation may be simply due to not being active enough. If you work out 12 to 16 hours a week, you burn 3,000 to 4,500 calories a day, so you end up consuming more nutrients for equivalent balance. At that rate, even if you just eat pasta, you get enough protein. It also looks like 12 to 16 hours a week of moderate exercise may be our natural rate. 12 to 16 hours a week. I don't think most people are exercising for 12 to 16 hours a week. I think most people do 30 minutes a day, rounded up to 8 days a week. That's most people do like 4 hours a week. Although surely things like lifting and sprinting and stuff are probably account for more. Maybe moderate exercise would be like walking and stuff. What qualifies as moderate exercise? 3.3 METs. MET stands for the metabolic equivalent of a task. 1 MET is the amount of energy used while sitting quietly. Physical activities may be rated using METs to indicate their intensity. For example, reading may use about 1.3 METs, while running may use 8 to 9. Oh. So walking on a slight incline is 5.3. Okay. So like just walking around and stuff would be. That's so interesting. Where did you get this research? Or is he must be just doing his own numbers, I guess. I find his case very compelling here, though. Guess I'm gonna probably I should go walking more. Well, it looks like maybe they've built something up that can kind of support them for a while. Only by walking to work. So if you are like me and you sit around all day and then you work out for 30 minutes, then that might not do it, right? But if you're just up and about cleaning the house and things like that, you probably get enough. I need to get myself back on Formula One talk. I'm seeing stuff on Twitter, but I haven't been getting any other information about what's going on with Formula One. Although that's the whole thing. Have you heard what they're doing in Las Vegas? So like their track goes around the whole strip. So basically every hotel, everybody has a view of it, right? And that's not okay with F1. And so they're saying, unless you pay us, we will block your view. It's a little disturbing to me how money grabby F1 is, man. But yeah, what you gonna expect by They really consider themselves like the high end. And that's the other thing is like Formula One is like high end luxury brands for their sponsors and things like that, you know, but I don't think most of the people that watch this are like that, you know. Uh-oh. We're back. Looks like I briefly lost my connection. But we're back. Anyways, yeah, I am concerned about if things really start to get wild over in Japan, that the treasuries are going to go nutso. You know, like, dude, if that thing really falls apart, like you could see the 10-year yield at like 8%. Like I'm just guesstimating, but. And that's like super hyper speculative, okay? But that's kind of what I think. Because yeah, like she's saying, it's like a 30-year carry trade. And what's this? Bloomberg on the Bank of Japan's tweak to its yield curve control policy. Per the graph below, the immediate reaction of the markets was to push the 10-year yield above 0.5%, also putting upward pressure on other government bond yields, especially in advanced economies. Japan's exit from yield curve control, while inevitable, still has some way to go and does its spillovers both domestically and internationally. It really is that yield curve control story really is the biggest piece of news for the week, if not the month. You see, okay, Paul Krugman. Can I rant for a second? Paul Krugman is such a hack. Okay. So retweeting Nick Timiro saying the Fed's preferred inflation gauge, the personal consumption expenditures price index, says it got even harder to be an inflation pessimist. Price data showing continuing disinflation. You save that one. Save that one because he is not looking ahead. You gotta look ahead, man. We are not out of the woods. Not saying it's gonna go bad, but we are not out of the woods. We get to like November and inflation's still subdued, market's still going well, then I would say that we've achieved a soft landing. But until then, I think we have a couple of key months ahead where things could like really turn on their head, especially with what we just saw in Japan, right? Well, the selling over here in the treasuries have subsided for now. It hasn't pulled back that much. I'm kind of curious why the micros here all, only 10 ticks off from the high when this is a good 1, 2, 3, 4, 5, 6. Maybe to 1.5. Maybe that's appropriate. But activity level has certainly died out. So it does look like they're kind of starting to build a hole in this 10 to 11 area. I don't know if we're going to get much better than that. So if we wanted to go short again, I suppose we could do it. Although I'm kind of suspect that it may just kind of wander around until the Michigan survey news. Jason Furman, real disposable income per capita has risen in 11 of the last 12 months, a total increase of 4.25, which is a fast pace. It still remains 2.5% below the CBO's pre-COVID forecast. So real disposable income, is still, I think for the most part, people will be made whole. What's something that I think is going on right now? Because, okay, so here I'm fear-mongering about the future. I don't think that we're out of the woods. Man, that turned back down really quickly there in the Treasury. That turned back down really quickly in the Treasury. I'm kind of, that kind of makes me... Okay, anyways, but right now, things are actually going pretty well for people. And the thing that's so funny is you go on TikTok, for instance, you wouldn't know it. There's these people on TikTok, they're trying to make the case that like things are worse for Americans right now than they were at the depths of the Great Depression. Like, oh my gosh. Okay, listen, if you're not an economist, probably shouldn't make videos about economic data. It's just, I'm sorry. It requires real expertise. Okay? There's real expertise in this thing. And I see especially left-leaning people post stuff all the time that's just absolutely retarded. Okay? And oh man, I was thinking about 398 and it's already too late. So you put an order there, there's no way that's gonna fill. Oh, okay, maybe they'll hit me. You've never watched it? Well, you could go and watch YouTube Shorts on your desktop. It's the same thing. It's not like that first. We already had a sell-off last year. Anyways, but like when you look at some of the numbers and like what people are making and so forth, it kind of suggests that things are actually doing pretty good for people. So things are actually going pretty good for people. So like what's happening is everybody's hyper pessimist and like the market's doing okay because we're being influenced by social media. So like I'm kind of wondering like, so like here's the thing is, if you are doing well right now, you ain't gonna say nothing, right? Like, especially over the last 2 years, like there's been a lot of discontent, right? So like, if you come out and you say you're doing well and you're like, hey guys, it's not so bad. You just you believe in yourself and go out and get what's due because there's a lot of opportunity out there actually. And you are just going to get lambasted by these people that are just like so negative, right? People keep pouring their political opinions into the markets. It's true. Now, I think that a large portion of why things are going so well, despite interest rates rising so much and the inflation problems, is that we've kind of had stealth stimulus this whole time from like, you've got this the stimulus coming from student loan forgiveness, but then there's been a lot of other things that are like incentives for businesses and stuff. That's not like direct money, but changes in laws and stuff that are encouraging companies to invest in stuff. So actually, we're seeing a lot of economic growth right now, and so it's kind of one of those things that's like, well, when some of that ends, it could fall really quickly, but like, that I think is why everybody is like super pessimistic, ends up being super pessimistic, but then it ends up being okay, right? And so if you're doing well, you don't want to, you're not going to show it on social media because everybody gets mad at you. Isn't that weird? Because the thing is, it has been like, one of the things that's bothered me about social media is that it's like, you go and you tell people that you're rich and then everybody pays attention, right? Like, I've seen a lot of TikTok channels where it's like, I'm a software engineer and I make $200,000 a year in California or something like that. And then they have these discussions, and like, really their whole thing is like, I'm rich. Ask me anything. Right? But you don't see TikToks of people talking about how great the economy is. It just doesn't happen. And even if the economy was doing really, really great, if it was like the late 90s, I think people would still be complaining. Because it's kind of, you'll punch up but not down, right? Like, if you're rich and you come out and you say that I'm rich, then people will try and pull you down, right? Versus if you're poor and you come out and you say I'm poor, everybody will just be like, oh, I'm poor too, it sucks. I feel bad for you. Yeah, this economy sucks. It's all the Republicans' fault, etc., etc., etc. It's so weird to me. So then the thing is like, okay, so like, should somebody come in and try and put in like a spice of reality into the social media? Ain't gonna be me. Sounds like a fool's errand to me. I am still concerned about weakness in the second half of the year, though. Kind of feel like, inflation probably is still going to be a thing. You're probably going to see some economic weakness follow through in the second half of the year because of monetary tightening. And some of these valuations seem a little high. Like, I think NVIDIA is a good company. I think that NVIDIA probably continues to make money hand over fist, but their stock price may be a little ahead of itself. On that note, Intel earnings really good yesterday. That stock is still relatively cheap. Don't know if it's worth buying now, but especially if things kind of turn south for a bit. But let me keep an eye on it. Well, there was a pretty wild, I wouldn't say aggressive, but they just kind of slipped through lower. It's kind of slowed down now, but it's not really backing off. If I was like the big guy doing the meta order, executing it short, I would be so tempted to just gobble up that 2,000 that's sitting there at 06. Because I'm concerned that if we start trading that it's going to pull. But if you gobbled it all up, that would probably cause more problems. So I don't think that you would actually want to do it. But I would be super tempted, right? I would be super tempted. Nick Timmerose, broader disinflation in June. PCE shows progress on all three buckets of core prices the Fed has called out. Core goods, 1.6% annualized. Housing, 6.2% analyzed. Core services ex housing, 3.3%. Okay. You know, it's been a long time since Nick Timmerose gave us something that was like really useful. He's just been reporting the data. Okay. Kind of caught something out of the corner of my eye there. It looks like it kind of ticked up and there's a little pushback, but it held. And there's another one on not a whole lot of contracts at 08. Yeah. The book not showing a ton of interest there. I'm starting to get like hyper focused now on the price movement and it's making me feel sleepy. Okay, there's a little bit of pushback there. Ouch. And he just got buried. Just got buried at 08. They're not taking 07.5, but I'm still kind of seeing like the inside. Super light. Okay. Flip back the other way. 08 half pulled. I'm seeing maybe a little bit of a turn in the dollar. Thinking about my position over here, I'm kind of feeling like I knew that I was a little bit late on the draw, so going back to social media, you were talking about I got called lucky for making money in trading, and after that, I never mentioned it again. Well, probably we're lucky. I mean, let's be honest. Most that this is one of the things that really drives me nuts on like the discussion on Reddit is that you got a lot of people that claim to be profitable, but it's like they've only been profitable for a month or two, and like. I don't think people realize what it takes to continue to be successful at this, like, you know, 5, 10 years, etc., right? And there are some people that just like gambled and got lucky, and so I don't know. It's tough to talk about trading online because the problem with the whole social media setup is that it's all centered around what's popular, right? And so if we're going to talk about trading strategies, you're only going to hear about the trading strategies that are popular. And the problem with that is that those strategies are, if it's popular enough, it's not going to work anymore. By the time you start hearing about it on social media, the edge is probably already gone. So that's why the trading community in larger communities is always just crap. For us, it's a little bit better to fly under the radar. Of course, if the channel blew up, we would I'm sure that we'd be able to deal with it, but it would bring additional challenges, right? Sure it is. So the problem with that, okay, so I'm already hinting the problems, man. So 1 month's not enough, right? 1 month's not enough, because you could be, if I came out here and I said, okay, I'm gonna make one tick and then I'll let it like ride for like a whole handle, right? I would probably win like 99% of the time. And by the end of the month, you would see a winner and you'd be like, look, there's no way that can be random. But when you actually understand the statistics, you'll realize that the amount of data that you need to prove that it's not random is huge in some cases, especially if you're doing something that's fat-tailed, right? If you are taking on a lot of risk compared to your reward, then that means that you have a far left tail, but you won't see that left tail as often. And it could take many years before you see that left tail, right? So, yeah. 1 month, not enough. To really convince me, you need 5 years, but I don't know. Even if you have 1 month, I'm still, that's still good. Bravo if you get a month, but just don't rest on your laurels, right? You should very, very much ask yourself, okay, are there far left tails in my strategy, right? I think that an optimal strategy, it eliminates those far left tails and only has far right tails. Like an optimal day trading strategy, you get small wins most of the time, and then you have far right tails. You don't have far left tails. But that's incredibly hard, if not impossible to do. Well, they're still kind of dancing around here. I don't know. No such thing? Well, so for instance, I think a strategy that kind of fits that pretty well is momentum. Like a momentum CTA strategy will tend to be on par with the market most of the time, and then every once in a while it will like way outperform the far right tail, right? Okay, so we're coming back down here pretty aggressively again. But, well, okay, so there's an iceberg on the offer now, 07.5. Oof. I don't know, like, so when it comes back up like that, one of the things that I'm often thinking is, okay, like the liquidity didn't look very good. They kind of need to back off and let it recover, and then maybe you can get more from selling in here. But it's selling all the way down, and there was hardly took anything for them to do it, so Okay, there they are at the lows. Well, I tell you what, I feel like it is way too soon for them to be breaking new lows again. You don't need such thick DOM columns? Yes, I do. How else are you supposed to see all the numbers? I only have the columns as thick as it's required to show the numbers. So I could bring the font down. Yes, I could probably fit 2 or 3 more DOMs on there, but I don't feel like it would really help. Plus, it'd be using more data. It's like more research, right? So there was a time when I put like other markets down here in the bottom, like oil and gold and stuff, and it was too much. It was too taxing on the system. Yeah. I really like my setup the way that it is, guys. Why are you always trying to change it? I've always noticed that chat perks up a little bit when we start talking about adjusting the screen. Let's switch this chart, and so on and so forth. I do think about it sometimes because, let's be honest, I do not keep a very good eye on the S&P 500 these days. It's like it just keeps going up and I'm not paying attention. No, I'm not going to make a poll because I'm not going to change it. This is a dictatorship. You will watch the DOMs that I want you to watch. I was getting a little excited there. If they were going to break new lows then that quickly, that would have been like, woo. But they backed off. They backed off. There was an iceberg at 06.5. Can be like Elon, make the poll and then do whatever you were going to do to begin with. No. See, the difference here is that with Elon will have really, really terrible ideas, and then everybody doesn't want them, and he does them anyways. Whereas over here, you guys will have really, really good ideas, and you all want them, and I don't do them anyways, right? We're opposites. I'm the yin to Elon Musk's yang. No, I'm not. I'm probably more like Elon than probably other. I think so here's a question. You look at the billionaires, like well-known billionaires in pop culture. Which of them is most like me? I think it's probably Elon, even though I'm nothing like Elon. I just saw a funny Babylon Bee post, but I'm not. You can go find it yourselves. I'm not going to step on that one today. President Joe Biden has grown increasingly frustrated with ineffective White House messaging on manufacturing. Isn't that always just... I tell you what. Isn't that always just the story? Like, I passed on one political thing. Now let's get into another political thing. That's always what it is with progressives. It's never like our policies are very ineffective or here's the current situation. It's always our messaging just isn't good enough. If we just adjust our messaging, then maybe things will work. It's never, oh, well, we just have to be good at our job and have good policies that actually, encourage innovation and growth. No, it's we just have to change what we say so that people believe it, and then things will happen for us. Nick Timmeros, the Employment Cost Index is seen within the Fed as the highest quality measure of compensation growth. The ECI component of greatest relevance to the Fed, wages and salaries for private sector workers, excluding incentive paid occupations, slowed in quarter two. Up 1.1% quarter over quarter, 4.8% year over year. Okay, so we came down to those lows. We kind of did like a double bottom, triple bottom sort of a thing. We're coming back up to 08.5. Was they're maybe kind of battling. I'm kind of seeing like the price action traders fighting over it. The flow looks pretty consistently short, though. I don't know if they have more left in them, though. I mean, that was 15,000 contracts short. They came down to the lows and they didn't hit it. Oh boy, Trump charged with 3 new felonies in Mar-a-Lago classified documents case. Oy. That thing's just never going to end, is it? How is the dollar doing? Well, so they came from 101.12 back up to 101.4, and they've kind of been oscillating there. Yeah, currency's kind of in a holding pattern. So it's we're kind of in a weird spot because sometimes you would start to see movement around this time and we're not really seeing it. It's a little bit more free than it usually is, but there's not like, I'm not seeing any super strong impulses right now. But what, 3 minutes to go till the S&P 500 opens. So the last swing high was 10. It looks like they're gonna come over it. Yeah. And it does so pretty quickly too. So I don't know. All of this is happening on very low volume and just like orders pulling, so I'm super suspicious of all of it. It's also curious how equities made yesterday's losses. Well, they didn't make it all back. We were at 46.35, the highs yesterday. Equities are looking pretty resilient here, though, aren't they? I don't think that would hold if the treasuries decided to puke again, but for now, treasuries seem to be saying we're fine. So kind of forming a cluster up here at the top now. It's curious. No reason to get involved inside day. It is kind of starting to turn into that, isn't it? I don't know. Those flows after the initial news really had me thinking that you know, there's just a lot more flow that had to come through because of the Japanese yen and so forth. I'm kind of looking at this thinking that, like, you know, maybe 4% is not a terrible place to get long rates on a longer term trade, because I think the risk here is that rates go much higher. And if they do go higher in the next few months, they'll really shoot up there, right? But And I think that we did see flows come through on that, but I was just a little bit too late to take advantage of it, you know? So is there going to be more today? I'm not sure. We got 30 minutes till more news. So that probably is a situation where instrument might just be a little bit, you know, wary of moving. But like I said, so far it kind of all looks like market maker shenanigans to me. I'm not seeing any real volume behind it. Maybe a slight bit of buying through this, but okay, here's the open. Wow, Mega Millions is up to 910 million. So it's a little iffy on the open here. It looks like maybe the buyers have a slight advantage in the S&P, but it's not clear yet. Wait, is this a which is what a revised release? Oh, no, it's the University of Michigan survey. So it's not like that. So these other ones is like, you know, we put a number out with the current economic data that we have, and then, you know, you get stuff later. This one is just a survey, right? So you're just going to get the latest survey results. It's not something where there's a revision or something like that. But it is one where they have inflation expectations. So that's why that one ends up being so important. Okay, coming back down a little bit. So I think the price action people are hoping that they come just short of the lows, and then that's the low for the day and they bounce back up. But again, well, okay, there's a little bit more force on this sell. They just sold 1815. That's the largest trade we've seen for a while. Cumulative delta is pushing to new lows for the day. You think it's revived? Well, let me come back over here. Oh, so they that's still a two-parter. I still wouldn't consider it like revision in quite the same way, you know. I wouldn't consider it a revision in the way that you get revisions like on the non-farms jobs report, for instance, where like a prior month's is like, you know, you thought it was one thing and it ends up being something completely different, sort of a thing. Shouldn't be as big. No, I don't think that that's normally the case. So every time that the University of Michigan comes out, there can be a relatively large move. And usually these days where you get sentiment and PCE on the same day tend to be big. Where are you reading that from? Okay. It's definitely doing the, we're going to bump higher now. Oh, on the Okana Day calendar. Okay, so let me see here. If I come to Forex Factory and I change things to this month, and then I come in and I say consumer surveys only. Yeah, U of M, there was the 14th. They're expecting 65.5 and they got 72.6 for consumer sentiment. So then they're expecting 72.6. Yeah, I don't know though. That's never something that's come up before, Lucas. I just would say that every time I see consumer sentiment on the docket, it tends to be relatively significant. And especially when it's paired with the core PCE. In fact, I bet you we could find an example. Because didn't it do it last June? Yeah, Friday, June 30th. Yeah. There was, if you look at June 30th, there was a lot of movement on that day. Okay, well, I'm going to bail on this. It wasn't a terrible trade, like the MFE and MAE was okay. But it's just one that just didn't go, so. Now, on the sim trade, I'm going to leave it on. I'm a little bit skeptical on them like busting out here before the news per se, but they are playing those games. You know, they're probably going to try and break 11, right? Because I want it to look like this. They want it to be double bottom, higher low, higher high. Right? They want a pattern that looks like this. All right. So they want to overcome this structure, quote unquote, structure from before the move, right? But what you could see happen is then... So what you could see happen if it really is a sell day. Yes, but shh. But I don't know. 15,000 contracts is about on for like this situation, don't you think? I mean, it's a Friday. I don't know if the numbers were too important. Now, if there's still meta orders coming in from the whole Japanese yen thing, you could still see like massive numbers. But so far, that doesn't appear to be coming through. So I think that we can knock that one off of the list. So then, yeah, 15,000 contracts in that sell seems to be like, well, actually, it's been more like 20,000 at some point. Seems to be appropriate. And we are getting a relatively large change the other way, which is why it was getting out. So just not really getting the flows I was hoping for. Well, E-mini's still kind of digging it out, but it looks like the futures traders are going long. They keep struggling over there in the treasury. It really is like you can see the insight has been low this whole time. My room is getting a little hot. Maybe that's why I'm feeling quiet and maybe even a little sleepy. Jerry Norton tweeting this morning, my feed continues to be filled by people trying to pick the top. Been that way for months. All these people are doing is proving that they are traders. It really feels to me like we're in a situation where we could start to see a downturn. But I don't think that I would call it a top. You know? Because I think that what you would get is like a retest of the lows, but not make it, you know? Another thing that's going on, interestingly enough, I'm seeing like like Forex Live says positive start in U.S. stock market says earnings lower from PCE help. So PCE was good, right? But the treasuries, the interest rates are higher. Not much to say at the moment. Let's just take a nap for the next 15 minutes. Then we'll all be rested and ready for the consumer sentiment numbers, right? I'm going to bet you that the consumer sentiment numbers are positive, though. Like what? They're expecting 72.6, and I bet you it could be more like 74. Well, I don't know. I really thought that they were going to bust this previous swing high, but it has turned into a liquidity hole in consolidation zone around 09. Chop suey. Does seem a little choppy. One thing that has been moving out there is oil. Oil took a big dip from 820 to 79.10. Oh, that's not that big of a dip. This is just like 20 cents. That's just a normal day in oil. Rest of the market's looking pretty quiet. I kind of honestly expected a little bit more activity on this Friday than we've gotten, given everything that happened yesterday. I thought that there'd be a lot of repositioning, but I don't know. Well, I mean, I guess there was a decent amount of action in the treasuries, but earlier this morning, I was seeing a ton of volume being traded like 3K market sells into 3 market buys, and the price didn't really move much for at least 30 minutes. Is that considered a liquidity hole? Well, that could be the beginnings of one, yeah. Because when you're really seeing a liquidity hole, what's going to happen is it's going to be like 300 contracts are bid. They sell it. They offer 300 contracts. They buy it. They bid 300 contracts, and it just sits like that forever, right? So, for about the past 45 minutes, so like since the last meta order that we had, like you notice that the inside bid is an offer has been really weak this whole time, you know, and when it moves, it doesn't take very many contracts to trade it through. But then you look at the numbers, right? 33, 27, 29, 20, like a ton of volume has been executed there, right? Because yesterday, when we were looking at on the trend day, it was like, 10,000, right? So it's one of those things where like they don't put up very much liquidity at any given time, but over the course of it being there for 45 minutes, a lot does end up trading there. So see, the reason why I got into the trade that I did was because they were doing movement that was suggesting that they wanted to move before the liquidity had healed, right? They did do a bunch of stuff like that, but ultimately it didn't break out. So that may have just been market maker shenanigans, and I'm just going to say, okay, well, they got me that time, but happens. Now we're in a position where maybe you would see them start to make another move, but we got consumer confidence. So now we got to work out like, okay, first there's consumer confidence, and does that change anything? And then if it doesn't, are there still flows that need to be executed? And they were always planning on them coming in after consumer confidence. That's another thing that we'd have to watch out for. Especially over in the currencies, because the currencies tend to do some crazy like stuff relating to rebalancing and so forth on weekends. Oh, Chamath got married again? Or for the first time? I don't know what the... So there's this new real-time strategy game coming out called Stormgate from Frost Giant Studios, which is basically they want to carry on the torch of Blizzard real-time strategy games. And that they put out alpha invites, and now everybody's joking about that they didn't get into the alpha. I didn't get... Apparently there was a survey, and if you took the survey, you were more likely to get in, and I missed it. So I didn't get in. Oh, that is gross. This is I don't even want to read what it is. That's so gross. It's so disturbing. It's a big bid there at 09.5 now, huh? Okay, so you've watched the video on large orders. How do we deal with that? Okay, well, we are like just before news. It's kind of been a little slow. We're kind of stuck in a range. It's relatively late into the session. All of a sudden, a big order comes up. That's highly suspicious. It's highly suspicious. So that might be somebody trying to get out of a long before the news comes, is what I think that might be. Ninja, how do I change my P&L from ticks to dollars? Good question. I don't know if you can. Can you? You can certainly, if you pull up like the performance analyzer, you can change it there, but I don't think in the control center that you get to change that. Yeah. Unless... Or maybe if you edit the account. No. But if you go to new trade performance, and you can look at your trade performance and you can change it. Do you think you can? I don't know how to do it. I don't see it. I guess I've never done it, and I don't see an immediate option for it. He shows it on the chart. Well, there are indicators I've seen that will show you your profit and loss on the chart. Yeah. But maybe you were talking about a different spot, because I was talking about in the control center. Still got 5-6 minutes here. Oh, this is interesting. On r/Wall Street Bets, tales from a 401k administrator. So open the chart trader with an open trade and click on the P&L. It changes from pips to percentage. Oh. Let's see here. So what's up, degenerates? I want to sit and tell you. I want you to sit. I just want to sit all of you regards down and tell you a story about my day to day the past month or two. I work for a nationwide 401k TPA fiduciary and actuary firm who shall remain nameless. Our entire firm has roughly $6 billion worth of plans that we administer across the U.S. for you super special apes. That's about 20,000 Lambos. Lately, I've noticed a massive increase in hardship requests due to eviction and foreclosure. That doesn't surprise me, actually. I'm talking about people getting so far underwater that they need to drain tens of thousands of dollars from their 401k so Jamie Dimon doesn't kick their stuff to the curb. The frequency of that increased tenfold in the past 2 months. Now, I'm taking a poo as of writing this, and I need to wipe so I can get back to saving these poor guys from losing their homes. But what do you think? But do what you will with this information and pay me with nudes of your wife. Peace. No. So that doesn't surprise me because the eviction moratorium is ending, right? 521 comments. Jeez. Nudes of my wife are behind a paywall. Times are tough, bro. Jeez. Jeez. DGen's draining their 401k to buy FD's bullish. Roger that. Still at 09, huh? Wonder. You know, there was that kind of that like buying in that one spot. Might have been profit taking on this short. If it was, they made money. Not a ton, but they worked out. Love the show. Oh, well, thank you very much. Oh, didn't you ask a question? Or were you the person that had posted a question about... Oh, no, that was somebody else. That was somebody else. It's the little things that make... You know what I find so fascinating about trading software is that it really is teeny tiny little details that makes the difference, you know? Like, I have so many little indicators and stuff. Like I have the watermark over here, and I have my inverse one on my Japanese yen so I can see what the, you know, what the USD JPY is instead of the other way around. You know, things like that. They can be like relatively small and easy tweaks, but like they make a world of difference, I think. And then you go to a different platform and it's different, and you like there's something about it that you want to change and they won't let you change it. So you know what's the one that drives me nuts on NinjaTrader that I wish you could change? You see over here on my chart, it says 458500. I wish I could get it to truncate that, you know, to just get rid of that 00 part. Yeah, I'll hold the sim trade through the news. Why not? Why not? Actually, you know what? I really shouldn't. Let's flatten it. It's just a sim trade, but let's try and be serious. because the liquidity is pulling for it, right? Yeah, now it's gonna just like get absolutely crushed. Look, there's some guys in micros that got out there. Okay, so it's slightly worse than expected. Expectations, we got 3 and 3.4. So the inflation expectations did not change. Inflation expectations did not change, but sentiment was slightly lower than anticipated. Or not. I did the right thing. Maybe I'm just lucky. Yeah, uneventful. Okay, so now the thing that I'm going to be watching, though, is there could still be sell volume out there, right? Need to get the order flow. Oh, yeah. You're talking about like if you go to data series and color for executions, and then you can plot executions, markers only, text and marker. That's why I'm here. Parsing a position together after the data drops is better. Yeah. Well, and I think that this is a situation where we could really take advantage. I mean, it depends on the way that the flows are going to go. Because again, my kind of thinking going into today was, probably the data that we're going to get is going to look okay. But then, if it does go up, that's just going to be like an opportunity to sell next week. And then they didn't even wait till next week. They just sold it on the news, right? So it's climbing up there. We're coming back to the open. I'm not seeing a huge change in cumulative delta, but I am seeing some relatively big amounts trading at certain prices. So I shouldn't say big. 1867 isn't big, but it's more than the tiny amounts that they'd been trading before that. I'm seeing quite a bit more of a drive in the 5-year than I am the other ones. And the dollar just got creamed. Maybe that one large order. Well, this one right here at 3980, that very much looks to me like the market makers cleaning their position before the news. So you'll see that before the news, before the end of the day too, is like there's like 2 major market makers, and they kind of end up being on opposite sides of things from each other, and so they just meet at wherever it is, and one guy wins and one guy loses in that time. But it doesn't matter, because like overall from the noise and everything, they should be able to make money on average. So you could kind of see that, because like they make it's almost like you can, I don't know how to describe it. It's like you can see there's an agreement being made on the DOM. It's like one guy has a big order, like you'll definitely see it going into the big close. One guy will have a big order up here, one guy will have a big order down here, and they're kind of haggle, and it might move 2 or 3 ticks before it finally, one side is forced to cross over and become the market orders and is the loser. So here at 12.5, I feel a lot better about, the relative position that you get. I'm a little bit weary about trading it, though. It just kind of seems like it's been a little bit tough today. And I think the flow that I would be trading off of is hyper speculative, you know? Hey Gary, how you been? Look, there was another big 250 right there traded. Oh no. Did we run out of battery? Hold on. Oh, you know what happened? I don't have it plugged in. Well, I guess we're just gonna have to go without the camera for the rest of the hour. I will turn it to basic over here like this. I don't know if I'm gonna take any trades, so I'll just close those. Keep an eye here. That might still happen, so. Well, if they keep buying here and they get back to like 16, that would wash out all of the other action for today, right? Have you noticed the markets are very range bound? Yeah, it's kind of been a little weird because there was at the beginning in the treasury market, there was some stuff that like it was like, okay, it's gonna be like a wavy day, right? But like, you know, slowly and surely the volatility clamped down. Now the SPOOs is kind of a different issue because the SPOOs are still pushing on the upside. I mean, they're still 30 points below yesterday, but okay, so I was reading that other thread that we were looking at. This guy's name is Long Dick Leukemia. I am an Ursa attorney and I work with your company, but I represent the people you work for. Hardship distributions were made easier to apply for last year, part of the Consolidated Appropriations Act. The law took effect January 1st of this year. The Department of Labor published new regulations to match the new law on April 18th, 3 months ago. That's why you see an increase around that time. As if that weren't enough, the new rule says that people can, quote, self-certify their hardships. What does that mean? It means you annoying effing TPAs don't need to go and verify that the person really is 4 months behind on their mortgage. You just take their word for it and give them the money. It's literally made up. That is really interesting. I did not know this was going on. I'm really glad I clicked. I don't know if it matters, but I'm really glad I clicked this thread. All true, but speaking from a plan sponsor perspective, plan participants are dumb AF. If they don't know the old rules, let alone the new rules, they just know they need money now and have a big stack in their 401k, so they show up with their hand out asking for a hardship exception. Yeah, there's 14.5. A little disappointed. I wanted to see more downside action today. Yeah. Well, I mean, I guess my original trade was the other way, right? I should turn on my focus assist mode for now. I have a hard time with notifications. Like, you know, when somebody's posts something on Slack at work, I want to react to it immediately. I don't want them to wait 5 minutes, you know? There are some things that it's part of my job to respond to them within a certain amount of time. So I make my notifications as loud as possible. And there was one that just came out here before we were done with the stream. What's your thoughts on tracking ultra bonds on the DOM as well? You know, in terms of like, should you put the ultra bonds as a DOM up here? You know, it's not going to hurt, but I don't think that it's really necessary. So I think that the key thing is you kind of want to get information across the curve. So you want the 10-year because that's still the most liquid one. And you want something on the really long end of the curve. So the 30-year or the UB would be good. I still would, you know, I would prefer to look at the ones that are more liquid, right? Okay. With the exception of the 2-year. So the reason why I don't care as much about the 2-year is because the fill algorithm over there is a little bit different. And so you have to look at what you're seeing on the DOM a little bit differently. But I do but you know, I can see the 2-year over here and I have it on my market analyzer. And so that's how I kind of watch it that way. So yeah. I don't know. I think that one of the things that will happen to you as you're trading is that in the beginning, you want to put as much stuff on your screen as you possibly can, right? And then over time, you go, well, I don't really use this and I don't really use this. And then you kind of like remove things over time and just look at the things that you really find yourself focusing on, right? And that's the way that your brain kind of works, is you're going to make like a bunch of connections. And then over time, it's going to prune the connections that it realizes it doesn't need to become more efficient, right? Well, you don't necessarily have to do that, because I've done a lot of that work for you. and so I would say that, especially if you're trading treasuries, right, that the most important things that you need to have up is ZN, something showing you the order flow in the S&P 500, and something showing you what's going on in the currencies. So my dollar index is good. Having the 6J up is good too. And then a market analyzer showing you all of the segments of the market. Can you bring up that why? Why do you want it? Sure. You know, I used to have it like this. And I think we got rid of it because we were like, it weirds people out too much. We should like bring it in here. So wait, we want delta chart. You gotta have that cumulative delta. That's the best part. And then let's change the interval. Let's change the interval to be like 1. Yeah, super deep in there. Now we can really see what's truly going on. And make the interval width a little bit bigger. There. Does that tickle your fancy? What do we got this circle tuner to? Now we can bring the circle down more than that. Oh, that's, no, wrong one. That should be 10. Oh, saw a little big tick there in the treasuries. Oh, there was a 2,000 lot bid there. Bring the circle tuner down. I want to see circles. Yeah. Do you see all of the passive orders waiting to auction up or down? I see a lot of different orders sitting on the bid offer. I see slightly more people sitting on the offer. Which is something that you all will often see when we're kind of like on the edge. We're pushing new highs or lows, but is not something that I found to be really very predictive of anything. Okay, so there's just a big change there in the treasury. It kind of perks my interest. What I'm getting here on the Delta chart doesn't look right. Cumulative Delta. It'll all sell, but that's not what my Ninja Trader one is showing. It might have something to do with the way that I have tick aggregation set. Let's just get rid of that because I don't trust it. When you look at it with that perspective, it just looks so noisy. I know. Treasuries are trying to convince me to go short. Let's go short. Well, so it doesn't show me lines for, like on this Vista chart, it won't show me lines for those things, no. I think there are some things that I can change in here. The euro is spiking. Yeah, I can see the dollar is kind of getting crushed here, huh? Auction Vista. Right? So there's a color for the midline that they make as yellow that's kind of hard to see. If I changed it to like magenta. Yeah, let's do magenta. You can kind of see it a little bit more clearly. Well, it doesn't show you anything that you can't just see on the DOM. The problem that I have with the auction vista is that it kind of lures people into focusing on things that aren't really very effective at predicting what's going to happen, right? So it seemed that like the thing that really matters is like the pace of the interactions between the limit orders and the market orders, right? If there's one market where, you know, they'll trade 200-300 at a time and they'll just go back and forth. And then there's other markets where they'll take 2,000 out at a time and just keep pushing it, right? And you need to see that to see which kind of mode they're in. When you have the Vista up, what it does is it causes you to focus on, you know, where the large orders on the DOM are and trying to sort out if that means that we're going to go up or down based off of that. And it just doesn't work. It's a more complicated system. It does look, though, that this would look quite a bit different if I didn't have tick aggregation on. Let's show that. That's an important thing to know for anybody that's possibly thinking about doing these. Let's see here, September. Okay, so here it is split out. And I'll add that on this one now. See, it's a little bit more clear. Let's see here. So interval 10. Detach it a little bit so I can kind of zoom it in. So now you can kind of see the little bit of fidgeting that it does back and forth. And the cumulative delta should look different too. Oh, this still seems to suggest selling. Yeah, it doesn't seem like you said anything too surprising. No, it's kind of funny that FOMC ended up being like the least significant news this week. But I'm telling you, know, like I've presented this kind of idea a bunch of different ways. I think that the way that I should really be saying it is sometimes the most important thing about the Federal Reserve meeting is that people are putting a lot of trades and other sorts of actions on hold until after the meeting. And that's why it matters, right? It is pretty looking. I kind of want to change it. So I want it to be, give it my radar colors. Called Night Vision. Yeah. And then I'm going to change it further and I'm going to say, Oh, I thought that I had these. Is it this color right here? No. Oh, there you go. That's weird that it doesn't do it until I do that. But all of the bars are saying that they're bearish, which is kind of weird. I'll have it your way. I think you could probably get away with not watching the DOM more on ES than you could over here, but I want to know why my cumulative delta over here is seemingly messed up though. Actually, it looks like there's been a couple of spots where this spread has come apart in ES. That's interesting. Oh, well, now it's giving me blue bars. I don't know what was with that. Anyways, I'm going to close them now. So even though we've come down a little bit, I haven't seen the big changes in cumulative delta and so forth. Yeah, so like that right there. There's a little bit of liquidity below us and they're hesitant to hit it. Uh-huh. But I feel like you're not hearing what I'm saying though. Looks like they did fill 2 of those contracts, so that's good. I guess if we trade that, I could do it again. Bitcoin is doing a little jump here. So let me try to be a little bit more explicit here. I am not a fan of the Auction Vista Bookmap chart thing. I really do not believe that it shows you anything that really is important to, being able to trade here that you can't see better on the DOM. So but there are things that I think are very important to understanding what's going on that you can only see on the DOM and you cannot see on Bookmap, right? So for instance, the liquidity whole thing, right? Okay, well, a large transaction happening that can create a liquidity hole, right? But what you want to see after that is, the latent liquidity kind of being more flighty, that not as many orders are put up at any given time, that they're hesitant to put the liquidity up there, etc., etc. You won't see that over here because what you see on the resting liquidity, except for like on the most innermost price, like doesn't change, right? And so that's why things like the Bookmap are insufficient to see some of these dynamics play out. You also, cumulative deltas is important. Now you don't have to do that with the chart. You can also use these these strength meter things, right? Strength meter is a really good way to keep track of that as well. Okay. So, but what the Vista chart does is, it gets you really hyper focused on like these limit orders, right? So people always will look at it and they say, "Oh, look, there's this big order up here," and like they went right to it. Or they'll say, "Oh, there's this, this big order appeared," and then they bounced off of it, right? And what that actually is kind of a hindsight bias, is that you'll find as soon as you start trading that the behavior is inconsistent. Maybe there's a Markov model going on underneath of that, but right. It's pretty, and so you want to try and interpret all of this extra information that you think that you're getting, but it's mostly noise. And so that's why I'm not really a fan of the Vista charts. Another way of putting this is, show us research that highlights a proven stylized behavior of markets that you will only be able to see, or you can see better on a Vista chart, because I haven't seen it. And that's the thing, is that like one of the key concepts to understand is the difference between resting liquidity and latent liquidity. And in order to really understand latent liquidity, you kind of have to watch every time it trades. How much was bid or offered? How much actually trade? And, it ticks up, it ticks down, and watching that as it goes along. And your Vista charts just don't show that, that granular. You would have to have it zoomed in and tell it to draw a new bar every time price changes or something like that. Okay. So they're still buying here. I think that I'm going to scratch this sim trade. Oops. So sometimes it's, when I'm putting orders on, it's a little slow for some reason. I don't know what's with that. think it has something to do with it reporting stuff back to come on flat. Went okay with that one. Okay. Did you not, man? Did you not hear me when I said that, like, that doesn't matter? And that you can't see it any better than you can see it on the DOM? I'm all scratching my nose here and like, I don't want to like scratch it too much because then I'll look like a weirdo. But then I'm like, oh yeah, the camera is dead, so I can scratch my nose all. Well, that's looking like a mighty strong buy coming through now. Like when you look at the overall thing, that's a pretty good buy coming through it. And it doesn't really match up very well with anything going on in the other markets either, by the way. Yeah. Heat map charts are really only good for historical reference. Yeah. I think one of the cool things about Jigsaw, though, is that, like, if I pull it up, it's tracking all of the data. So if I pull it up, it'll still pull it up immediately. I have to have it open for it to give me that stuff. So that's good. I really need to, because I tell you what, so we have these indicators, right, that will show you like cumulative level 2 or cumulative depth, essentially. And there's filters on it because there's all these orders like stacking and canceling all the time, right? And so what my indicator is doing is it's kind of looking at the maximum and minimum and so forth and kind of trying to filter it based off of that. And when I display that one, you definitely see like, okay, the offers will be stronger and then the bids will be stronger. And those things will flip around at key points and you'll see like, okay, when it flipped, then there was the reversal or whatever the deal was, right? But when you turn around and you try to say, okay, this flipped, so now that means that I need to buy or vice versa or whatever, right? Doesn't work. So like, I don't think that there's any coincidence that it changes when it does, because it always changes in a key point. But there appears to be like a hidden Markov model of some sort under the covers, where sometimes the market moves towards the liquidity and sometimes it moves away from the liquidity, essentially. And I think that you could make a Markov model to say, which regime are you in? Are you in the one where we go towards it or when we go away from it? And use that and then combine those things together. And then maybe you would have something where, you know, you can look at the cumulative depth as kind of a guide, right? But these algorithms, a lot of the algorithms, as I understand it, they do look at the balance between the bid and offer, but like only on the first 1 or 2 levels. I guess you could come in here and you could do like this is like, I'm gonna make this big. So what if you only show like 2 levels? No, that's not what you want. I wanted to make it so that it was like only going to show me the inside 2 levels. Oh, maybe you can do it like, maybe we can do it this way. Well, you can definitely use the imbalance and the flip once and say only include the inside, for instance. Yeah, or you're right. I could just change the depth to 2. Like this. Oh, that's not actually working, is it? The 25, right? Turn off depth history, maybe 2. Yeah, there you go. But look, the depth chart is not adjusting. Then push the recycling bin on the Vista chart. No, that's not doing it either. But that's what I was saying, that like if you come in here and you do like the depth imbalance and show imbalance and only show 2. And then total depth right there. Then you can kind of see it more clearly. Then you can and then you would also want to add in the volume chart right here. Right. And cumulative delta. And then correlating those things together, you could kind of see the things that I'm talking about. Right? But you'll notice when you look at it from this perspective and you're like, okay, so what are the limit orders telling us? Pretty effing random, right? Looks pretty effing random to me. Yeah, tick compression does something weird to the chart for sure. You want to pull that one back up? Closed it before, didn't I? Yeah. PSU 23. So let's change this. Back 25. Night vision. Total depth. Zip. Now you can kind of see it. Now you can kind of see that the offers are kind of a little bit heavier. And like, where do they change? This it will be like on my indicator, it's like even more clear because the filtering, what the filtering does. But you can kind of see here on this little dip here, there was a change. That's a nice theory, but can you prove that? I think I can prove that when you reverse, it tends to leave liquidity behind there. So it's like very faint, but you can kind of see like right here they turned back down, and then like look, they left a little bit of liquidity behind them. Let me draw it in blue. No, that didn't help. Yeah, you definitely see it. It's very obvious in treasuries that like there's always like a 3 to 5K left, but just above the previous swing high low. Right. But then, like, almost inevitably, if it gets back up there, most of those orders cancel. It's kind of weird. almost like, so why did they even bother putting them up? But whatever. Yeah, is he using volume spread analysis? That's what I was thinking. Okay, so like one of the things on Reddit was like, okay, there was this one thread where they were like, okay, what are you doing? Like, what is something that you found really work? And there was only one comment in that thread that just from the way that it was written and stuff really felt authoritative. And he was basically like, oh, I've tried all of these different things, but volume spread analysis was the only thing that really worked for me. And so they put a book that for volume spread analysis. And I read the book, and it was just nonsense, man. Like, there was nothing in that book that was like any kind of unusual analysis that I had seen at all. So... you see the shaded areas behind the current. What are you talking about? Which prices are you talking about? But I do remember them using that kind of like terminology, right? I don't know. So like another way of arguing this is I can just come back to this This is always like the final when people don't believe. How can you explain this? This is the thing that I always fall back on. It doesn't matter what you're seeing on your DOM. Doesn't matter what the last swing high, last swing low was. It doesn't matter what the high of the day is or what the low of the day is or anything else of that matter. If I came into the S&P 500 and sold 1 million contracts at once, it would move down. Right? The future orders are what matter. You can't see it's not big enough. You need to make it the biggest chart possible. You gotta get going in 10 minutes. Then we gotta really zoom in. Right? Really zoom in. And then why is the interval 30? We don't want the interval to be 30. We want it to be more like 10. 1, 10 maybe. So, let's see here if I can you see that on there? Okay. So I think what Gary is trying to say is like, okay, we came around, we came to here, this point right here. And then, oh, look, here's these things that came up. And so what happens? They go down to it and then they reverse, right? Oh, here's some. So he's saying they're going to go back to 4606 and then reverse, right? Right. So what I'm trying to say is, yes, it's doing that today, but you come in next week and it could be doing completely different thing. Because I did a lot of study tracking these sorts of things. Of course, I did it by hand for, maybe 3 to 6 months. I think it was back in 2018, right? When we tracked these sorts of things. And what did we find? It changes. The way that they react to the liquidity changes. That there was a time, that right now there's a time where you see that and they're going to go for it and flip, okay? But a time will come where when orders show up down below like that, it will cause it to reverse almost immediately. And then people will always say, see, look, they're running away from the liquidity. So, how do we resolve this? Well, I say it's random, or it shifts. It goes in. It runs in regimes. Okay. Do we have evidence to suggest that that's not the case? That there is some sort of a pattern that can tell you which way it's going to go? Because what it really comes down to is like if there was some technical pattern, well, it's gonna work until it doesn't work. I tell you what. Because once you understand the nature of the market, you kind of you very quickly come to understand why that sort of a signal is never going to be reliable. Because if it was really a reliable signal, everybody would just be able to trade off of that. It would be, it would be incredibly obvious to everybody that that's what's going on. We would all be trading off of it. Right? Anytime anybody comes in and tries to tell you, I'm using some piece of information purely from the market and the price and stuff, and I'm using that to predict where it's going to go in like the next 5 minutes, they're probably full of crap. That's when we get into what I call technical analysis. And it It doesn't work because you trading on it changes the way that it moves. Yeah, talking to a few traders that blindly follow smart money concepts, it seems to me that people like to believe there's a certain type of narrative is behind their analysis. Well, what they want to believe, so you gotta understand. I wish I could, maybe I can. I'll turn the camera back on for a little bit, and then we gotta get going, okay? But we should have enough power now to keep it going. What people want to believe is that I can watch what everybody else is doing, and then somehow be smarter than all of them and use everything that they're looking at to make a decision and beat the crowd. That's what people want to believe. And they believe that because that's the way your brain is wired, right? Your brain evolved to see footprints in the mud and determine which way the deer were walking. Your brain evolved to notice that it's more rainy and more dry during certain times of year, right? Our whole thing is set up to recognize patterns that follow standard distributions, right? So you got a Gaussian distribution, and you say most of the time it comes out like this, right? The problem is twofold here in the markets. One, markets have fat tails, and we are not very good at seeing the fat tails. So you think that you see the pattern, but you're not capable of looking at enough data to really verify if there's a pattern there at all, or if it's just noise. And usually what we do is we look at like 50 data points, and that's enough. That's the most that we can really kind of think of and keep track of. And then we say we figured it out, right? That's the first problem. And then the second problem is that trading it changes the market. So if you did actually find a real statistical aberration, you start trading it, it disappears. Right? We've proven this, or that's what we're going to do in the next video. That should go in, what part should go in your video on SMC? It's like low volume nodes in swing session or daily profiles. They work, but not consistently. I'll trade them if I notice I'm working on a given day. Market has to tell me it doesn't want low volume prices before I try trading it. And it kind of, you know, like the thing that's funny about it is that it kind of depends on who major players in the markets are. So something that I have kind of noticed anecdotally is that these kinds of patterns that people look at tend to change when there's a big volatility event. You would get that day where volatility just like spikes through the roof or whatever. And usually whatever the most popular strategy that was going on at that time, like completely blows up, and then it stops acting that way. Oh, that one where you talk about the fact that they want to believe they can outsmart everyone else looking at the same thing. Yeah. Well, you're going to watch what everybody else is doing and then somehow outsmart them, right? Here's how you outsmart the crowd, okay? You fucking ignore them. Doesn't matter what they think is going to happen because they don't know. They're not in the know, right? Somebody's going to come in and sell 100,000 contracts into the ZN because of Japanese central bank policy change, right? That's actionable knowledge. If I knew that somebody else was going to do that, and now that's front running, if depending on how I knew it. If I had inside information about the people that were executing it and I traded on, that'd be front running. That's illegal. Okay. But if I know based on how their strategy works and everything that this is probably what they're going to do, right? Okay. All of these people looking at the market right now, they don't know that that's going to happen. They have no clue because it hasn't happened yet. So there's no indication of it on the chart at all. And you can kind of trade it in ways to try and fool people. And it, whatever their indicators and strategies are at the time, it doesn't matter what it is. You just adjust the way that you execute to those to maximize the amount of liquidity that you can get, you know? So if they think that if the big thing right now is, a higher low, a head and shoulders kind of reversal sort of a thing, then what I'll do is I'll intentionally, by manipulating my best bid and offer, cause a higher low to happen. You could start to get all of that liquidity coming in, thinking that they're going to buy it up, and then sell into them because I need the liquidity, right? You can't win that game unless you know that the guy is just going to sell, right? If you know that the guy is just going to sell, then you can just read everything as a game to try and help this guy to sell more, right? And then everything makes sense. Well, that said, we should get going, but we should talk about the way things went out today because, after that really, really aggressive selling that where I kind of got in at, it's been higher the whole time since then. So perhaps I think that actually probably was somebody panicking and or really aggressively having to sell in here. I think at this point right here, that they were done. If not, somebody starting to execute the other way. Because, since then it's been nothing but buy-in. We're actually broke the highs in cumulative delta. So I don't know what would be driving the buying. Perhaps it was the economic data. Perhaps it was the perhaps it was the economic data. I don't know. Well, well, don't argue with it. See, this is the thing, is that what I think or what you think or how much experience you have doesn't matter, right? The only thing that matters is what does the market actually do? Okay. So if that's really the heart of the matter, then the real question you should be asking is, if I think that there is a behavior, how do I prove that it's actually a thing? Right? Because what most retail traders do is they say, oh, I think that there's a thing, and then they just trade it. Instead of doing all of the work, prove it empirically, make sure that they've got all of their T's crossed and stuff. Right? They just go straight into it. And this is how, and then you get these people that don't, like the smart money concepts people that, they really don't have an effing clue what's going on. And it's just their theory a theory that expresses their paranoia that everything's out to get them and that rich people control the world, right? Maybe they do control the world. I'm told that it's the rich people with alien technologies, and they're trying to unite the world under one world government so that we can get access to greater alien technology. That's what it's all about, apparently. Right? But, so to the point, if we don't have that kind of that information that proves something, then I don't care. And the thing is okay, you might have a theory, and I could go and do the work to try and prove it, but then there's lots of theories. So what are you going to do to make me, really get interested in that particular thing to go through and do it? Well, the way that it works right now is whatever is the most popular thing that I can tear down, I go and find it and do it that way. So it doesn't matter, Gary. All that matters is, can you prove it empirically? I'm telling you, there are a lot of really successful people out in the market that have ideas about the way the market is that is just straight up wrong. And you can make money off of it. That makes it, when really experienced people are wrong about something, that means that there's more opportunity available for you, right? But seriously, how do you prove it empirically? Because if we can't prove it empirically, I don't care. Because there's a trillion things that people will claim about the market, and every one of them says that they're experienced and know what they're doing. Okay, nobody comes in and says, well, okay, maybe a few people do come in and say, but it's pretty rare for me to have somebody to come in and say, oh, you should trade this way, but you know, I don't really have any clue what I'm talking about. I'm not very good at this, not very experienced, right? Nobody says that, right? They're always going to say, well, you should do it this way, and this is why I think that I am qualified to tell you that. It's a logical fallacy. It's an appeal to authority, logical fallacy. It doesn't matter. Prove it empirically. If you can't prove it empirically, I don't care. I don't care. If you can't prove it empirically, I only care if it's popular enough for me to piss a bunch of people off if I go and I prove it wrong, which is what I want to do with the smart money concept thing. So anyways, that's good. I feel like I had a couple of things in there that I could use in the video, because in this one, I really want to make them, man. Like I want it to be, okay, the people that are really genuinely trying to sort out what they want to do and trade and so forth, are going to watch this video and go, oh, yeah, this isn't very good. Or they're trading and they're struggling. Oh, this is why I was having a tough time with it. And for the people that are really genuinely like dedicated to it, because they're like making their living off of selling the education to them and stuff, I want them to feel threatened. I want them to be pissed off. Like, I want them to be making all sorts of crazy videos trying to prove why it's wrong. But of course, they're not going to provide any empirical data to do so, right? Anyways, I'm going to get going. I'll see you guys next week. Stay excellent.